San Diego. Looks like we are starting right on time. Carl, how's everything looking behind the scenes? Fred?
Looks great.
Perfect. So, welcome you guys. Today, we are joining San Diego Spotlight with Benchmark Mortgage. I have here for you Carl Spiteri. We know him through an affiliation called National Association of Remodeling Industry. It's here in San Diego. And the NARI is what they call themselves. Their core mission value or mission statement is to make sure to bring professionalism to the remodeling industry. And so that's how we're affiliated with Carl. The gentleman, who's sitting right next to me, happens to be my husband. His name is Jack Crocker. He's the owner of Classic Home Improvements. I really got him here for moral support more than anything else. So let's go ahead and get started. We've slated about 30 minutes for this phone call. We are live right now on YouTube, Facebook, Twitter, Periscope. I don't even know where else. I've got Fred behind the scenes getting us online absolutely everywhere. I also have Cassandra in the background, and she is monitoring our live feed so we can answer any questions that you in the audience might have while Carl is here. The whole purpose of this is to help you get educated on things you might not know about. If you're going online and you're looking for information, there's a really, really, really strong chance that the information you're reading is from a ghostwriter and not necessarily the expert. So I'm bringing the expert to you. Carl, please tell me a little bit about, first of all, who you are, how you got to be where you're at, and a little bit about Benchmark and your services.
All right. Well, my name is Carl Spiteri. I've been in the mortgage industry for many, many, many years now. We take a different approach to it. Our mortgage world revolves around education and making sure that we give people the proper answers to ask the right questions to be able to make right choices for themselves. Mortgages is a lot more about interest rate. It's finding what the real root of the challenge is and providing the right alternative for you. It's just a lot more than interest rate. Again, we do it all through education. Benchmark Mortgage is the national lender. They're licensed, I believe, 48 or 49 states throughout the country. Have been in business about 20 years, and they're just a real progressive, real good company to work with. Their own servicing department. They have their own. They're one of the few smaller sized lenders that actually have an in-house construction department. And so when we work with people such as Jack, we have a construction department dedicated to the construction team, because when you do a construction loan, you, the borrower, have to qualify. The contractor also has to qualify. Really? And then most importantly, the project has to qualify. And with construction lending, you're not just giving people, I need $200,000 for my ADU. Here's your $200,000. We'll see you later. We're actually monitoring the project, making sure the bills are paid. They're paid correctly. They're paid on time. There's lien releases that go along with the payments. So we're solving a lot of potential challenges after the fact of loan closing up until you get your construction project done. So it's very, very important to work with a lender that has a construction department that they work with.
I didn't realize that not all of them did, honestly.
Yeah.
So how long have you been with Benchmark?
I've been with them 11 years now, 12 years now, January, 12 years.
And how does it work? You're like the owner of the branch or a branch manager?
I'm a branch manager for a corporation of the Benchmark Mortgage. We're our own San Diego entity. We process. We do all our work with San Diego people. So even though we're a national lender, we're employing San Diegans. We're working for San Diegans on a daily basis. My staff is all out there. They come to the office and work. So we're not just an 800 number that's operating in some different state. We're actually bringing jobs to San Diego.
Perfect. I love it.
Yeah.
So before I start asking you just a whole bunch of questions, let's kind of warm up a little bit. What's like the most creative loan that you've seen when it comes to renovating a house? Do you have to use one, like, I know HELOC. HELOC is the only thing I really know, but I know there's dozens of other options out there. Can you tell me just a little bit about those
Yeah,
options?
it all depends on the situation, right? I don't think there's one loan that's so creative that just stands out above the rest. They're all used for different purposes. The difference between the construction loan and a HELOC is that the HELOC is going to, or the home equity line of credit, right? You usually have a first mortgage. Now you're getting a second mortgage, which has a line of credit on it that you get to use to do whatever. Um, that's based on the value of today. So if your house is worth $500,000 and you owe $480,000 on your house because you did it at FHA loans, let's say, there's no equity to take, so you can't get a home equity line of credit or a HELOC. Where with the construction loans that we have, there's basically two renovation loans that we'll talk about, which is home style renovation and 203K. They are going to take and give you a percentage of the completed value. So you have a 3-bedroom, 2-bath home that's worth $500,000. You're going to turn into a 4-bedroom, 3-bath home that's going to be worth $750,000. We can lend you a percentage of that $750,000, not the $500,000. So I think that's very important. The difference between the two types of products. The home equity line is cheaper, and it's an easy solution if you have the equity and you have you want to take on the responsibility of the lien releases and all that kind of stuff on yourself. Where we get into probably the most aggressive product we have is something called the 203K, and excuse me, and that will take you all the way up to 110% of the completed loan to value. It will allow for less than stellar credit. It will allow for essentially no cash reserves. So if you have no money, you still want to remodel. Basically, that would not be my ideal scenario. I think you should have a little bit of money in reserve when you're remodeling, but you could do it with no reserves, less than stellar credit, and it'll take you all the way to 110% of the completed value, which is pretty aggressive and pretty incredible on a construction type product.
What does that mean to me? Like, I'm not a finance person. So does that mean that so you said my house is 500,000, it's going to be 700,000. You're going to give me a loan for 700,000?
We will, because the completed value would be 110% of 770. Yes, we would give you $700,000 to remodel not to remodel your house. You have to pay off your current first at say 500, and then you'd have another $200,000 to get your remodel done.
Okay, so you do have to pay it off first before you can.
You have to pay off the existing first mortgage. We finance the whole thing. The other real benefit, I think, to a 203K type loan as opposed to a traditional construction loan is construction loans are short term. They're usually for a period, whether it's 12 months, 18 months, 24 months, however long it takes to finish the project. And then you have to go out and get a new mortgage, your standard 30-year fixed rate product, right? During the 2008, 2009 recession, where people got into problems is they quit lending. Money got really tight. So what they qualified for, or they lost their job during the construction. There was a lot of challenges where what we're giving you is a 30-year fixed rate loan. You never have to refinance the thing if you don't want to. So it's not a temporary loan that a traditional construction loan is. It's a fixed rate and it's for 30 years.
Okay. I think I just read something about that not too long ago. It was called something else. I wrote it down because I wanted to ask you about it, but I don't see it on here, so I take it back.
It'll come to you.
I'm sure it will.
Right after we get out this call, right?
Oh, you know what? You triggered a question for me, actually.
Okay.
You said something about you should have some finances with the 203K loan or with the HELOC loan. Are there any deposits that have to be made for you to take out those loans?
The only thing we require up front is the appraisal fee, which is probably about $650. And then if you do the 203K loan, which we talked about here, you have to have what's called a HUD inspector, which is somebody that works for FHA, for Housing and Urban Development, that's there to be a buffer between you and the contractor, because we know that the contractor needs to finish a project, and we know that the consumer needs a home. They don't need 2x4s and drywall and electrical conduit, right? They need a home to live in. And the HUD inspector's job is to make sure that the home gets built. So he's the buffer between the homeowner and the contractor.
Okay.
And that's about $1,000 fee.
Okay. Got it. And then another thing that you triggered when you were talking earlier was lien releases. And I know Jack can speak to that too, but what can you tell people about lien releases? Because I know that it comes up a lot in construction, but I even don't really know what a lien release is or does.
Well, Jack has a very reputable company, right? He does what he says what he does, and he's there. But what if Jack wasn't that way, right? So me, the homeowner, pays Jack the contractor, or somebody other than Jack the contractor, right? For the cement, to pour the foundation. Jack takes the money and pays his employees payroll. He doesn't pay the cement contractor. The cement contractor can come back and lien your home because he hasn't been paid. Now all of a sudden you have a home with a cement lien on it that you already paid for because Jack got the money, right? Well, that can turn into a big old mess with less than reputable contractors. I will say that we're a lending company. We work with different people. You always want to work with reputable contractors. Contracting should not be about the lowest bid. Oh, this guy can do it for half the price of the other guy. No, they can't. Material is material, and labor is labor. There's not a 50% spread in what somebody can do. So be careful when you're going with the lowest bid. But the lien thing is what causes problems, because if Jack goes out of business, then that lien is still on your home and you have to pay it off again. So lien releases are a very, very important part of the projects.
Is there anything you'd want to add to that?
No, I agree. I mean, picking your contractor, getting somebody that's reputable is absolutely critical. The whole point, sometimes people wonder when they get a preliminary notice, they think that their house is being liened and foreclosed on. All it is it's basically a trade contractor saying, hey, I'm Bob the builder, and your contractor hired me for $10,000 to do this work. If he doesn't pay me, then I get to lien your house. It doesn't mean they're liening the house. And if you're dealing with a reputable contractor, that's not a bad thing. All you have to do is just, you make sure that, like when I get paid for concrete, the first people we pay are the concrete people so that we can release that lien. That's a normal part of business. But, and here's what I always tell people, if you ever get one, still take it seriously and ask the questions and make sure that everybody's aware of what's going on. You don't have to stop all payments till it's resolved, but you should absolutely hold back more than the value of your releases until you have new papers that say, my name is Bob the builder, I've been paid in full, and I release my right to lien. It's just a little bit of extra paperwork. And if you have a reputable contractor, not a big deal. If you have a contractor that gets furious about that, then you need to ask a few extra questions.
Be very, very careful in that case. And that's what the HUD consultant does. He takes care of that step to make sure that is done correctly. So that's kind of like, even though you're spending money on the consultant, there's a value that you're being given for that, which is peace of mind, right? Which is what I think everybody wants with their home.
Absolutely. Here's kind of a silly question for you, and I think I already know the answer just from being in construction for a long time. But when you're a homeowner and you get one of these loans, whether it's a 203 or the HELOC, what are the differences with the payments? Does it come in lump sum? Does it get paid directly to the contractor? Is it a joint check? Is it vary on what kind of loan?
Well, if it's a HELOC, you're getting a checkbook that says spend the money as you wish. So that's that whole other world, which again can be a good thing, but also you should have caution with that. With the home style renovation and the 203K, you're getting joint checks. So we're depositing into the contractor's account based on your signature. So you're signing, yes, this work has been completed, and then the money goes to the contractor.
So the homeowner is essentially protected from the homeowner being able to take off with the cash because they have to sign off on it.
Yeah. The only concern we have as a lender is making sure the thing gets built. Right? We don't want to foreclose on a house we don't foreclose on a house anyway, right? But you don't want to foreclose on a house that's 50% complete. Right. We just want to make sure the thing gets done and it gets done according to schedule and according to plan.
Okay. Let me see. There are a lot of people on right now, and I know that has Steve, or I'm not going to say your name right. I'm sorry. Steve says you're great, Carl.
Who says that?
Steve says you're great. He's
Thanks, Steve.
He says you and your team are amazing. Okay, so you talked a little bit about how long you can finance the loans. Can you recap on that one more time? You said the HELOC, or one of them was short term, one of them was long term. When you say long term, how long?
I'm not sure I understand the question. So home equity line of credit is traditionally 2 5-year draw periods where you can use the money in and out for 10 years, 2 5-year periods. And then once that period is gone, you have a 20-year payback on it. The negative about home equity lines of credit is they're usually monthly adjustables. I mean, we're in a very, very low interest rate environment right now. Is that going to last forever? You can talk to different economists and they'll tell you different things, I'm sure. But, I tend to think no, eventually rates will go up and your payment will go up with that. With the two products I'm talking about here, you're getting 30-year fixed rate loans. So that is the benefit, I think, overall. It trumps the home equity line of credit completely in this market.
Yeah, it sounds like it. Okay. You don't have to go to your original lender when you want to do a construction loan, right?
No.
Okay.
Yeah, you should go with the lender that has some experience doing these types of loans, because they are a little bit more cumbersome than a traditional loan, and a lot of people say they can do them, that necessarily understand them, and it just adds a little more challenge.
When folks come to you, what would you suggest that the process looks like? So and this is what's happening a lot, like with Jack's customers. He's getting calls every day from people. Buying a house. It's an older house. It's in 1984. I don't know. I want to tear everything down and I want to rebuild it and make it a custom home. What does that process look like for you? Do you suggest that homeowners come to you directly first? Do you suggest they come to the contractor first? How does that look?
Yeah, I don't think it matters who they go to first. It's probably a good idea to get a gauge on what it's going to cost, right, before they call me, because I'm going to say, well, how much you need? And they're going to say, I don't know. So I'm going to send them back to Jack. So, getting to have an indication of what they think it's going to cost, or maybe they work it the other way around. They come to me first and say, now I have $200,000. Jack, what can you do for 200 grand? So it depends on where the consumer is coming from, but no matter what, they need to get me involved pretty quickly, in my opinion, to let them know what it is they qualify for. A couple of negatives with this program is in San Diego, we have a high balance lending limit of $753,000, just a little over that. So your first mortgage and your construction project cannot exceed $753,000 on one unit. Now it goes up to $964,000 for 2 units, and it kind of goes up about $200,000 from there for 3 units and 4 units. So you can get into higher numbers, but if you're just want to remodel your single family home, you're stuck with the $753,000 limit. That sometimes can be a challenge for people.
When you're saying units, are you meaning are we talking about like ADUs and like building?
Yeah, let's say you decided to put a second unit, a rental unit on your property, which is, it's easier and easier and easier today in San Diego, all of California, but in San Diego County to get these second units put on your property. And maybe it becomes some kind of a rental source for you, or you have your elderly parents moving in on it, or your kids that are coming back from COVID college, or whatever it happens to be, right? You're wanting to build this unit for somebody else or to rent, then the loan amount goes up about $200,000. So that's something we discuss. I think the biggest thing, and like I started with when we started talking here, was education. You need to know what your options are. You need to what's in your best interest. As you're talking to me, as you're talking to Jack, and just bringing it together. Like I say, when you're doing a traditional purchase or a refinance, it's just me and you talking. Well, now we have so many. We have the city or the county that gets involved. We have Jack and your company getting involved. There's us. There's if the HUD consultant's involved, there's all these different people, and we want to kind of bring it all together and get everybody on the same page. Here's the budget. Here's what we have to work with. What can we do with that?
Okay.
One thing I was going to bring up too is, I've obviously done several of these, and in the construction loans and the ones where they do the revised equity, I've often had homeowners sign up for them. You'd said at the beginning of the thing that the homeowner has to qualify, but so does the contractor.
Right.
And what I've run into in the past, and maybe you could speak to this a little bit, are homeowners getting the loan and then wanting to hire a cheaper contractor, or more often than not, do a portion of the work themselves, provide some of the materials themselves. And the lenders are not okay with that because of the need for licensing and protecting that asset. Could you speak to that a little bit?
Absolutely. So there on these products, there is no sweat equity involved. We will, someone can do whatever they want, but we're not going to give them value for it. If they want to paint, that's great, but we're not going to lend them the money to paint. So everything has to be done by a licensed contractor. It's very, very hard to switch contractors midstream because we have to get the contractor reapproved. We have to get all the paperwork, the contract, the specific, the real detailed bids have to come from the new contractor. So you're delaying your project probably, I'd say 30 to 60 days by getting a new contractor midstream. You want to bring your team together and then start the hard work, in my opinion. I think that was your two questions. Was there a third?
Yeah, no, mostly it's around the sweat equity. People will get the $200,000 loan and they're like, well, I'm going to do 50 grand of this myself. And, money. And I've seen where they were frustrated when the lender said no, but you have to remember, kind of to our point earlier about lien releases and stuff, the bank is going to be extremely interested in having a very reputable contractor because they're assigning a value to work not yet performed. And so I think that's an important thing for homeowners to understand if they're going to, consider this versus a home equity line. Kind of to your point with the home equity line, maybe those triggers aren't in place because you can spend that money as you please. But when you're using one of these other products, it's very important that you don't sort of have in the back of your mind that you're going to use some of your own sweat equity to save a few dollars.
Yeah. We're going to account for every penny that goes out. We're not paying anybody unless they're predetermined that they were the person to be paid. It's a fund control, and again, fund control is you can either like it or hate it. But I believe I would not remodel a house without fund control. If it was me personally, my personal money, I would never do it. That's not what I do. That's not my specialty, right? And I don't need anybody to start a project not completed or not completed to spec, which is the biggest concern, right? I mean, there's a lot of shortcuts you can take in construction, in anything really, but in construction, there's a lot of shortcuts you can take, and you don't want to take those shortcuts. And I would say, 80-90% of the time, right?
Yep.
There's a way to do things and a way not to do things, and we're only going to fund the ones that are done correctly.
Right.
Can that 203K loan, can that be used on one of those build on your lot, brand new construction, build my house on my lot?
No, a brand new construction loan is a different type of loan. And we have a product called the one-time close. It's a Fannie Mae product where if you own a lot or you're buying a lot, we can lend you the money to build a house, to build your dream home. Again, up to the lending limit of $753. But it's a real good program, and we also. I don't know if you guys can hear the airplane just flew overhead, but we use them sometimes even for lot splits where somebody lives on a larger lot and they can have it rezoned and then build additional units. I mean, there's a lot of different ways we can work with this product, but it goes to 95% loan to value, where if you're going with some of the traditional product, you're at 30% down. 35% down sometimes. These are better for loan to value. They're also better because, again, we're giving you a 30-year fixed rate loan on the construction side. You have 9 months to construct it with interest only payments, and then after it rolls over automatically to a 30-year fixed rate loan that's already locked in. So your interest rate before you break ground. Because what if the economy doesn't turn and rates go from 3% to 6%? Do you want to have to, now all of a sudden you don't qualify for the house you just built, right? You want a 30-year fixed rate loan in place.
Great. Awesome. I don't know if there's anybody out there right now that has a question that you'd like to ask him, general or very distinct. Please feel free to go down to the bottom of your chat. You can see there's a little chat box. We can see your questions and he can answer those live. You can also comment in whatever platform you're on. If you're on YouTube, Facebook, Twitter, I do have somebody monitoring those questions as well. I don't think I have any questions from here that I can personally think of. Are there any other? I actually do. I take that back. How long is the process from reaching out to you to getting financed and starting demo?
Normally, the way I always like to explain to the consumer is that we should start the process as soon as you start talking to Jack, right? And then by the time it all goes through, we have plans and permits ready to pull. That's when we're done with the project. Sometimes we're lagging a little bit. Sometimes the city's lagging a little bit, but usually they kind of come together pretty, about the same time. So that's really, there's no set time frame. We can't fund the loan until we have plans and permits ready to pull. So, that's a process with the county. Something that we didn't talk too much on is accessory dwelling units, which seems to be a real big thing going on. The difference between the two products is with the home style renovation loan, we can build a detached. These are remodel programs, right? So you have to be careful on how they're defined, but we can build a detached ADU on the home style renovation. On the 203K, that if we're going to build an ADU, it must be a contiguous to the existing foundation. So there's a little difference between the two products.
Can you have one of those bridgeways from the house to?
As long as they're floor, wall, and ceiling, you can do that. It can be a storage area between the two, it can be garage between the two. Now, on a lot of San Diego homes, like in the North Park, South Park area especially, but pretty much all of the county, I guess, where they have, on the olden days, they used to build detached garages. The detached garage is an existing foundation, so we can actually remodel the garage and put 2 units on top of it if we wanted to.
Now, do they have to add another garage? If they had an existing garage and they converted, do they have to now add an additional garage in some parts of the city?
That would be up to the city.
Okay.
Jack would know better than I.
The short answer is yes. You need to always maintain covered prop. Every zone is different, but it's very rare where if you have existing covered parking, you need to maintain covered parking. So if you remodel your garage into a suite, then you have to build a garage somewhere else on your property.
That's kind of what I thought. We did just get a question. When someone is shopping for a contractor, how do they know if their contractor is approvable by the lender?
They don't. We will find out rather quickly. But again, I think if you look at reviews, you look at state of California licensing, you kind of check all that out to make sure that they're real. Then they're usually approvable. But I mean, you'd be surprised what you see in some of these records. It's pretty interesting out there. It's serious. I had a lady about a year and a half ago that was $500,000 into a rebuild, or no, I take that back. It was probably $300,000 into a rebuild, and the guy walked away. She had a house that was completely open. It was, there was just drywall. There was no drywall. There was just studs, and it was gone. He was gone. So it's really, really important to find a good contractor, a good company to work with.
I want to actually touch on that a little bit. So a lot of folks don't know how to do that. The Contractor State Licensing Board, it's cslb.ca.gov. And that's where you want to go to check to see if somebody's properly licensed. And it also shows if you're insured, lets you know if they've ever operated under another name or entity. I think it covers who your salespeople are, so you know that they're actually representing the company that they say that they are. For reviews, I like to touch on that a little bit. You know, Yelp's a great place to go and talk about restaurants. It's not really a great place to go check on referrals for contractors. If you want to check on referrals for contractors, I think that Angie's List is probably top notch. They make sure that it's not friends and family that are doing reviews on there. So that's where I would refer people to. Can you, while we're talking about contractors, Jack, can you maybe share with us anything that might be a red flag when somebody's looking to hire a contractor for a remodel?
Yeah, well, the kind of remodels we're talking about are tend to be large structural type remodels with an addition and those sorts of things. And in California, there's two things to consider for a licensed contractor. One of them is there's probably a dozen or 2 dozen designations. So somebody might be licensed to set tile, but that's it. Somebody might license to be a plumber, but that's it. You need to get a general contractor if you're doing one of these things that's licensed to do all of the work that's being performed. And that's sort of a technical answer. The other thing that you want to do is that, especially in times where there's a lot of people starting companies, you don't, for a big project, I mean, if someone's painting your bedroom, that's one thing, you can always repaint it. But when you're talking about a structural remodel, you need to make sure that you're dealing with somebody that's done it many, many times before and is very qualified in that specific work. You know, you might have a contractor that does kitchens all day long, but if you have an addition with a kitchen in it, that's very, very different than just a kitchen. So you want to definitely take a look and make sure that they've got experience in the type of work that's being performed, because construction has lots and lots of different aspects to it and takes a lifetime to learn all those aspects. So those are two things. And then, like you said, look at reviews and don't just look on one website where I mean, you guys have all been to a restaurant where it says, you know, write a good review and we'll give you a free cup of coffee. Imagine what the contractors are doing, you know, and so you want to make sure that you're talking to people that are reviewing that have actually had work performed on their project and not just, like you said, friends and family or just ghost reviews, whatever's going on.
And we go through a whole vetting process where, you know, we have to get the insurance, we have to get the liability and the workman's comp, and we have to, you know, there's a whole vetting process we go through for the contractor. So even if you start working with somebody that's maybe not quite straight up, we're going to find out about it pretty early in the process. So just know that, you know, that's part of what these loans do.
Hey, Carl, for construction, we say go out and make sure that you get 3 quotes. Make sure that you're comparing apples to apples. In your industry, are we recommended to do the same thing? Do they say go, or you guys, how does the lending work? Do we get 3 mortgage brokers that we talk to? Do we get one and you guys all have access to the same products? How does
No, just one right here. You know, we're done.
Perfect.
No, you know, you should, in my opinion, you should work with somebody you're comfortable working with. You should, you know, you want to call 3 people, call 3 people, call 6. It doesn't matter. What you're going to have to do, in my opinion, is come to a dialogue to where you get a comfort level. Once you get a comfort level, if you want to check reviews, you want to check whatever, that's great as well. But get the comfort level because you're going to be working with us for a while. I mean, my team is top notch here. They're you know, I have an incredible group of people that work with me, and they all are very, very competent. So we can get through the process pretty efficiently. But if you talk to somebody that doesn't know how to spell 203K, you know, if he's a quarter or a 0.5% or 10% cheaper, it doesn't matter because you're not going to get the deal done, you know. So, but most of our products, I mean, these are the 2 products we're talking about is a Fannie Mae product and a FHA product. Everybody has access to them, but do they know how to do them? And that's the problem you run into with these type of loans. But absolutely, you should always work with somebody when you're talking about money, that's somebody you're comfortable with.
I think that has a lot to do with it. These major renovations, they're not a 2 or 3 day project. You're dating them, and you know, for 6 months or a year, depending on how long the project takes and what you're
Exactly.
Go ahead.
I was going to say one thing. I think I don't know if we touched on, but we were talking about reserves. You know, what if you don't have any money in the bank? You know, behind you. We do require 10% reserves on all projects. So if you go over budget, if there's a sewer pipe that gets discovered or something that comes up, there's 10% that you can't get back at the end. You can get back as far as loan deduction We can't give you cash back at the end, but it's there for challenges that come up. And in construction projects, most of the time, you're going to find something that wasn't exactly planned for.
Really, really, really good to know. I want to touch on that for just a minute, because what are some of the things that people, I mean, I know some of them, but what are some of the things that people will find once you get behind the walls and you start renovating, where it's an unexpected cost? Like, people are always worried about extra work orders. What causes an extra work order?
Well, I think from a construction standpoint, depending on who your contractor is, now if you have a 150-year-old house, then anything's possible when you get behind the walls until you open things up. But generally speaking, there really shouldn't be a whole lot of surprises. Unless you've just bought a home and they're immediately remodeling it, because you may know that the toilet might have flushed the one time you tried it, but once you've used it for a week, maybe there's roots in the line and they're just cleaned out. So there's little things like that that can come up. Frankly, the majority of time, what comes up with change orders are changing your scope or changing your spec or buying a fancier tub, or those kind. You get in this, we remodel it, and you're like, I want a bigger window. Those are the things that typically are going to drive your cost up. But it is remodeling, and nobody has X-ray vision, and so sometimes when you get in there, you can run into issues like the wiring is bad, the plumbing is bad. Typically things that are behind the wall that you couldn't see. Sometimes in old homes, believe it or not, we'll open up the wall and the entire house has no insulation in it.
Wow.
Because that it wasn't always in the building code that they had to be insulated. It's been for a very long time. So sometimes things like that, but change orders with a reputable contractor should be pretty rare unless you're revising the scope. One thing I would say is, you take the carpet up and you see a foundation problem that's only under the carpet that you couldn't see from the basement or the side of the house. Basically, if you can see it, it should be anticipated. It's the stuff that you can't see that could potentially cause you some issues.
We usually see a lot of that with like fixtures and, like you say, a bathtub or faucets and appliances and stuff as well.
Yeah.
We went to, wasn't there a house once that you told me about where they opened up and there was like plywood underneath the tub or something like that? There's been some funky stories I've heard about the old buildings.
There's funny stories. What usually happens is, and just to clarify a little bit what Carl said, is when you get these loans, they say they want 10% in reserves. That doesn't mean if you're doing a $500,000 remodel, you need a whole extra $50,000 in your bank account. You need access. So if the value of the loan's 500,000, you only want to spend 450 of it, it's still in the loan. You don't get to just keep it. If you don't spend it, it just comes off the bottom. So a lot of times what will happen is, once we get near the end of the loan and that money is still available, sometimes they'll spend it on, on something that maybe they didn't know that they could afford or not, that kind of thing. That's where a lot of change orders can come from.
Yeah, that happens a lot.
We have one other question come in. I think we touched on it earlier. It said, who do you call for if you want to remodel do you call the contractor or do you call your lending agent? And what I heard Carl say earlier was, you can really start with either one of them. Carl's going to want to know how much you need, and you're not going to know how much you need until you talk to a contractor, so he can tell you how much it's going to cost as a rough number. So really what I understand from you guys is they can start anywhere they want. If you want to start with Carl, we've got his number up above. It's been scrolling, and we do encourage you to give him a call. His office line is 619-544-6444. He is a San Diego benchmark mortgage, did I say representative business? And he can definitely.
We're a branch office is what we are. So
there you go. Jack Crocker is I told you guys he's my husband. He's also a contractor here in San Diego, doing design build remodels, home additions, casitas, ADUs, granny suites, second floor additions. These are all the types of projects that we're talking about where you're going to need a pretty substantial loan. Carl, one last question for you. What's the smallest amount? What's the smallest loan that somebody would come to you for?
I mean, there are loans called the 203A Streamline, which is for projects 35,000 and under. I would almost say that if you have the equity, you'd probably be better off going to a line of credit. But yeah, it all depends. I don't think we don't have a loan minimum. We're just here to help people. So, call me up, ask me the questions. And if it's something we'll do, great. If I need to refer you to my friend that does lines of credit for a living, then I'll refer you over to him. It all depends on what your needs are. And just give us a call. We love to talk to people. That's what we do.
Perfect. Thank you so much. One last plug for National Association of Remodeling Industry. You can go to their website. It's narisd.org, narisd.org. There's a complete list of contractors on there. Their hashtag is remodeling done right. Everybody who's affiliated with NARI wants to bring that high level of professionalism. We believe that we are the best in the industry, and it's because we are partnered with people like Carl. We make sure that we stay on top of what the rules and regulations are in our industry. And that's one of the reasons why we brought Carl here, is because of our affiliation with NARI. So thank you for joining us on the Spotlight, San Diego Spotlight today. We do have another event coming up next Wednesday. It's at 11 o'clock, and it's home remodeling, design and construction, and it's with Kohler. So they're going to showcase some of their new products. We're really excited to show you guys that. If you'd like to register, go ahead and go to readytoremodel.com. And thank you, everybody who showed up today. Carl, thank you so much. Jack, thank you for being my support.
Thanks, guys. Thanks for having me on. I appreciate it. Have a good day.
Bye.
Bye.